Bitcoin just closed a full week below 60,000 for the first time since 2023. It also closed below its 200-week moving average for the first time in 4 years. ETF outflows hit over 4 billion in June, the worst month on record, and this week a number came up that hasn't shown up since December 22, right before the last cycle bottom. People are calling for 42,000, some are calling for 150,000 by year end, and that range of serious predictions right now is about as wide as I've ever seen it. So I want to give you my honest answer, not a guess dressed up as certainty, but a specific zone built from the data that's actually worked at every prior bottom, plus the one signal that just fired this week. Let's get into it. Let me start with what happened this week because it's the freshest piece of the puzzle. CryptoQuant tracks something called the realized profit and loss ratio. It measures the net percentage of Bitcoin supply sitting in profit versus in a loss. And this week that ratio dropped to negative 0.35. That's a 43-month low. Last time it printed a number like this was December 22, right before the FTX collapse, or right after it, I think, when Bitcoin was trading below 16,000. And here's why that matters. Same reading also showed up in 2019 and in 2015. Every single time it marked a major bottom rather than the start of a deeper crash. When this ratio goes this negative, it means more Bitcoin supply is sitting at a loss than almost at any other point in the asset's history. The people who are going to panic sell have already sold for the most part, and those who are underwater are staying put. Bitwise's chief investment officer, Matt Huggins, connected this directly to the strategy news that I covered a few weeks ago. He said the strategy preferred stock situation, which sparked the crash down to 58,000 in late June, squeezed excess leverage out of the market and moved things closer to a real bottom, not further away from one. So first piece of my answer starts there. This kind of reading has a strong track record and it just triggered again. Let's talk about the actual price zone because the bottom is near isn't specific enough to be useful. Bitcoin closed below its weekly 200 period moving average for the first time in 4 years. That line currently sits somewhere around 62,000 to 63,000. This average has acted as a floor in every past cycle. I've talked about it a lot. Losing it doesn't guarantee the bottom is in, but it has lined up with periods of deep pessimism every single time it's happened before that have been close to a bottom. Below that, the next major zone traders are watching is between 55K and 58K. Bitcoin already touched 58K during the late June crash, and if that level fails to hold on a weekly close, the next real support doesn't show up again until somewhere in the low 50,000. I've also talked before about the power law model, the long-term valuation framework that maps Bitcoin's price against a multi-decade growth curve. Bitcoin already tagged the lower boundary of that model earlier this cycle. That band combined with the 200-week moving average and the 55,000 to 58,000 zone gives us three independent methods that are all pointing to roughly the same window. I believe the most likely scenario is that Bitcoin bottoms somewhere between 53,000 and 59,000 this cycle. I don't think we need to move to 42,000 for this to qualify as a real historic bottom, but I also wouldn't be shocked to see a final flush into the low 50,000s before it's over. That's the range I'm watching as kind of the base case, although it's possible the low is already in, honestly. And let's look at the other side of this because the real analysis has to include what could go wrong, other possibilities. The clearest bearish case comes from the ETF flows. June was the worst month on record for Bitcoin ETFs, with 4 billion leaving the funds, like I mentioned earlier. Most of that comes from BlackRock's IBIT specifically, and until that money starts coming back in, calling a bottom with full confidence is a little harder. Bottom usually needs demand returning, not just selling exhausting itself. There's also a technical pattern some analysts are watching, a head and shoulders formation on the weekly chart that, if it plays out, projects a move toward 42,000. I'm not dismissing that entirely. There might be a small chance. Chart patterns like that can fail, though, especially with lower open interest than we saw a month ago. But the setup is real. Won't pretend otherwise, although I don't think it's likely. And the macro backdrop is another thing. Kevin Warsh, the new Fed chair, held rates steady at its first meeting and took an expected rate cut off the table. Tighter monetary policy makes it harder for risk assets like Bitcoin to catch a sustained bid. If the Fed stays hawkish this year, the 53 to 59K range could get tested more than once before it holds. So here's my honest framing. I'm not promising you the exact bottom to the dollar. Nobody can do that. What I'm telling you is which signals have worked before, which ones just recently fired again, and which price zone I'm personally watching. Given everything I just walked through, here's what I'm doing, and you can take it or leave it. I'm continuing to dollar cost average through the entire range. If Bitcoin grinds sideways between 53K and 63K for the next few months, that's perfect. That's a great opportunity. I'd keep buying. I will keep buying on the way down and the way sideways. I'm not trying to catch the exact bottom timing. I've tried that in past cycles and it never works the way you'd hope. What gives me confidence isn't the single number, it's more the alignments of these different indicators and data points. The realized profit and loss ratio hasn't looked this extreme since the last confirmed bottom. The 200-week moving average has been lost, which has happened before every recovery. And the power law model says we're trading in a deep value zone that's only shown up a handful of times in Bitcoin's entire history. None of that means tomorrow is the day or even next month. It means the ingredients for a bottom are already on the table and the bottom is being formed right now. To sum it up, the realized profit and loss ratio just hit a 43-month low, matching the exact reading from the December 2022 bottom. The 200-week moving average has been lost for the first time in 4 years, and multiple models point to the same 53 to 59K zone. I can't promise you the exact day, again, but I can tell you where I'm watching and why. That's all I've got. If this helped, hit like and subscribe. Share it with someone who needs a clear answer instead of more noise. Go ahead and check out the Bitcoin blueprint. There'll be a link in the description and in the pinned comment. And I'll see you in the next one.